Join me as I dive into the ultimate showdown to see which investment really comes out on top, Bitcoin or gold. Did you know that in just over a decade, Bitcoin has surged from being practically worthless to a price that has, at times, made a single coin more valuable than pounds of gold? It's an incredible rise that has everyone asking the same question. For centuries, gold has been the undisputed king of safe haven assets. It's the shiny, tangible metal that has backed empires, survived wars, and been a symbol of wealth since ancient times. You can hold it, you can wear it, and central banks around the world store tons of it in their vaults. It's the very definition of a store of value. Then, out of the digital ether in 2009, came Bitcoin, a mysterious, decentralized digital currency with no physical form, created by an anonymous figure known as Satoshi Nakamoto. Initially dismissed by many, it has since ignited a financial revolution, challenging the very foundations of what we consider money. So here we are, at a crossroads. On one side, we have gold, the thousand-year-old champion, the embodiment of stability and trust. On the other, Bitcoin, the young, explosive challenger, the flag-bearer of technological innovation and a new financial paradigm. Investors, both seasoned and new, are caught in the middle. Do you stick with the time-tested security of gold, especially when economic clouds gather? Or do you bet on the high-growth potential of Bitcoin, despite its notorious and heart-stopping volatility? It's a classic battle of old money versus new tech, and the stakes couldn't be higher for your portfolio. Let's break down the core of this debate by looking at what makes each asset unique. Gold's value is intrinsic. It has real-world applications in jewelry, electronics, and dentistry. Its supply is finite and physically limited. You can't just print more gold. This scarcity is what has preserved its value through generations of inflation and currency devaluations. When you own physical gold, you own it outright. It's not dependent on a power grid or an internet connection. It's a tangible asset you can touch. And for many, that provides a level of security that nothing digital can match. Now, let's switch gears to Bitcoin. Its superpower is decentralization. Unlike traditional currencies controlled by governments and central banks, Bitcoin operates on a global network of computers called the blockchain. This means no single entity can control it, manipulate its supply, or freeze your account. Transactions are peer-to-peer, cutting out the middlemen like banks. Its supply is also strictly limited. There will only ever be 21 million Bitcoin. This digital scarcity is a key part of its design, making it what many call digital gold. Its technology allows for relatively easy transfer and storage compared to moving and securing tons of physical metal. You can send millions of dollars worth of Bitcoin across the globe in minutes for a relatively small fee. Try doing that with gold bars. However, this technological edge comes with its own set of risks. Bitcoin is famously volatile. Its price can swing dramatically in a single day, driven by market sentiment, regulatory news, or even a single tweet. A 20% drop in a week isn't unheard of, which can be terrifying for the risk-averse investor. Security is another major concern. While the Bitcoin network itself is incredibly secure, your personal holdings are only as safe as your private keys. If you lose your keys or get hacked, your Bitcoin could be gone forever with no one to call for help. This is a stark contrast to gold, where theft is a physical risk, but one we have centuries of experience in managing with vaults and insurance. So, where does the smart money seem to be heading? Let's look at the latest trends. For a long time, the narrative was simple. Gold is for safety, Bitcoin is for speculation. But that line is starting to blur. We're seeing major institutional players, the big Wall Street firms and investment funds, starting to allocate a small percentage of their portfolios to Bitcoin. They're not replacing their gold holdings entirely, but they are treating Bitcoin as a legitimate asset class, a potential hedge against inflation, and a source of growth that gold simply can't offer. Some experts argue that in our increasingly digital world, a digital store of value just makes more sense for future generations. Millennials and Gen Z who grew up online are often more comfortable with digital assets than physical ones. They see Bitcoin's technology not as a risk, but as its greatest strength. On the other hand, many seasoned economists and investors like Warren Buffett remain highly skeptical. They point to gold's millennial-long track record and argue that Bitcoin has no intrinsic value. It doesn't produce anything, and its worth is based purely on what the next person is willing to pay for it. They see a bubble waiting to pop, while gold remains the ultimate form of financial insurance. An interesting development is the rise of gold-backed tokens on the blockchain. These are digital assets that represent ownership of real, physical gold stored in a vault. This innovation attempts to give you the best of both worlds, the stability and tangible backing of gold. Combined with the ease of transfer and divisibility of a digital asset, it shows that the two worlds aren't just competing, they're also starting to influence each other. So, after all this, which one wins? The truth is, there's no single right answer. It completely depends on you, your age, your financial goals, and your tolerance for risk. Let's recap the final arguments. Gold is the ultimate defensive player. It's your portfolio's insurance policy. It's not going to make you rich overnight, but it aims to preserve your wealth during times of economic turmoil and high inflation. It has stood the test of time, and its physical nature provides a unique sense of security. If you are a conservative investor, nearing retirement, or simply want to sleep well at night, knowing part of your wealth is safe from market crashes, gold remains an unmatched choice. Bitcoin, on the other hand, is the star offensive player. It offers the potential for astronomical growth and is at the forefront of a technological revolution. It's a bet on the future of finance and a decentralized world. However, it comes with extreme volatility and technological risks. If you are a younger investor with a long time horizon, or someone with a high risk tolerance who wants to allocate a small portion of your portfolio to a high growth asset, Bitcoin could be an exciting addition. Just remember the golden rule: never invest more than you are willing to lose. Perhaps the smartest strategy isn't choosing one over the other. Many financial advisors now suggest that a diversified portfolio could include a place for both: gold as the stable foundation and a small allocation to Bitcoin as a speculative growth engine. That way, you get a balance of safety and potential upside. Understanding the fundamental differences between them is the most important step you can take. Don't just follow the hype. Do your own research, understand what you're buying, and make a decision that aligns with your personal financial journey. This debate is far from over and will continue to evolve as the world changes. What are your thoughts? Are you Team Gold, Team Bitcoin, or do you believe in holding both? I'd love to read your opinions, so drop them in the comments below. Your insight helps everyone in this community learn and grow. Thanks for watching. If you found this breakdown helpful, please hit that like button and subscribe to the channel for more deep dives into the world of finance and investing. Don't forget to ring the bell so you never miss an update. We'll see you in the next video.